Welcome back to Iraqi Dinar Alert. When we talk about the Iraqi dinar and its potential, the conversation usually revolves around the official exchange rate set by the Central Bank of Iraq. But there's another, equally important rate that many investors miss: the black market, or parallel market rate, V. This unofficial rate is a huge deal. It shapes how investors feel, builds or breaks public trust in the currency, and even affects Iraq's economic stability. If you're following the dinar, understanding this rate is non-negotiable. So, what exactly is the black market exchange rate? It's simply the price people pay for currency outside of official banks. In Iraq, many citizens and small businesses need US dollars for everything from imports to travel. When they can't get enough dollars at the official rate, they turn to the open market. This high demand pushes the price of the dollar up, creating a gap. For instance, if the central bank's rate is 1320 dinars to $1, but on the street, it's 1500. People start seeing that 1500 as the real value. Why does this black market even exist? It's a classic case of supply and demand. The official system just can't keep up. There's a huge demand for US dollars, but there are restrictions, delays, and complex banking rules that make getting them difficult. Add in a general distrust of the banking system and some cross-border smuggling, and you have the perfect recipe for a thriving parallel market. When people lose faith in the official rate, they naturally look elsewhere. For investors, this black market rate is like a truth serum for the economy. While the central bank can declare an official rate, it can't control what people are actually willing to pay. If the black market rate soars way above the official one, it's a red flag. It signals intense pressure on the dinar, a shortage of dollars, and general economic stress. On the flip side, when the black market rate starts to close in on the official rate, it's a sign that things are stabilizing. This is critical for dinar investors who are hoping for the currency to strengthen. The black market offers early clues. First, it reveals true market sentiment. If Iraqis themselves are paying a premium for dollars, it means their confidence in the dinar is low. A strong hint that a sudden revaluation isn't likely. But if that rate starts to drop and align with the official rate, it shows lower demand for dollars and growing trust in the dinar. Very positive sign for long-term growth. Second, it directly influences inflation. A weaker dinar on the black market means imported goods cost more. Since Iraq imports a lot, this pushes prices up for everyone. Rising inflation affects the cost of living, business operations, and can force the government to take measures that might delay any plans to strengthen the currency. Third, it impacts government policy. The Central Bank of Iraq watches the black market very closely. If the gap gets too wide, they might have to step in. This could mean increasing the supply of dollars, tightening banking rules, or even adjusting the official exchange rate. All of these decisions directly affect the dinar's strength and investor confidence. The black market rate also acts as a real-time report card on Iraq's economic reforms. Iraq has been working to modernize its banking system with digital payments and stronger anti-money laundering measures. If these reforms are effective, the black market rate tends to stabilize. If they're struggling, the gap widens. So, by watching this rate, investors can gauge how well these crucial reforms are actually working on the ground. Don't forget the political angle. Currency markets are sensitive to political news. Any hint of instability, be it government changes, protests, or regional tensions, can cause the black market rate to shift within hours. Why? Because fear drives people to safer assets, like the US dollar. Watching these fluctuations helps investors understand the short-term risks tied to the dinar. Finally, there's the psychological impact. When the public sees the dinar weakening on the street, they get nervous. More people rush to buy dollars, which puts even more pressure on the dinar. It's a feedback loop that can slow down the entire economy. The dinar's value isn't just about oil prices and government policy, it's also about public confidence. So, can the black market rate improve? Absolutely. If Iraq increases its dollar supply, if banking reforms succeed, and if overall market confidence grows, the gap will shrink. A smaller gap is one of the strongest indicators of a stable or strengthening currency. To wrap it up, the black market exchange rate might be unofficial, but it tells a powerful story for investors. It's a warning signal, a confidence meter, and a guide to public sentiment. It reveals the truth behind the official numbers. Anyone serious about the Iraqi dinar must keep a close eye on it, because it's one of the most important indicators of what's really happening. Thanks for watching, and be sure to subscribe for more updates.